Good morning and welcome to Chaikin PowerFeed, your daily market digest. Today is Wednesday, June 27th, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can check out what I'm thinking on Twitter at Dan_Russo_CMT. PowerFeed TV brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. You can sign up to receive Chaikin PowerFeed for free at www.chaikinanalytics.com/PowerFeed TV. So we're kind of seeing a return to choppy trading here. U.S. equities were higher on Tuesday, bouncing back from Monday's pullback in the S&P 500, which was actually the largest decline since April. Small caps and the NASDAQ led the large caps. Treasuries were slightly weaker across the curve. The dollar was stronger against the major crosses. Gold finished down 70 basis points. WTI crude extending its rally up over 3.5% yesterday, moving beyond the $70 level after reports that the State Department is pushing U.S. allies to cut oil imports from Iran to zero. So that pushed oil back over the $70 level. As we get to the desk this morning, futures are down about 30 basis points, but off the worst levels of the morning following a negative session in Asia that saw China lagging. Chinese market now down over 20% from its highs. European equities are lower, though it's a fairly limited pullback. Dollar is about unchanged against the major crosses. The treasuries are rallying. 10-year is up 9/32 in price to yield 2.85%, and crude is extending its rally this morning up another 80 basis points. So let's dive right in. S&P 500, the return of choppy trading is what I'm calling it for now. Macro trade headlines, really driving sentiment here. Kind of risk on, risk off, depending on the headlines. So we do have support at 27.10, and we are testing those levels this morning in the futures market. Below that, 26.58 to 26.75, which also encompasses the 200-day moving average at 26.65. Resistance comes into play at that key level, 27.41, and then again at 2800. Despite the macro headlines, from a technical standpoint, nothing has changed in our view. Maybe prolonged a little bit, not up and out as quickly as we would like, given the macro picture. But the RSI is in bullish ranges. We've talked about that. Did not get below 40 on the recent pullback. We'll see how she does today. And Chaikin money flow remains solidly positive. So what we're looking for now is the return of the micro, if you will. Once we get to the second quarter earnings season, and if earnings come in, better than expected, as they have a tendency to do, I think the market could use that as a catalyst to start to move up and out. However, we are in a bit of a micro news vacuum, and the macro is really driving trading. Latest trade tension headlines, latest tweets from the president, really weighing on sentiment. We'll take a look at the VIX today as a sentiment indicator a little bit later in the show. So your market in a minute, sent to you every day as a PowerFeed subscriber. Stocks rebound as choppy trading returns. Oil back over $70 a barrel. Sentiment drifts between fear and greed on these macro headlines. Like I said, we'll touch on the VIX. My note today to Chaikin Analytics clients, I want to focus on the weak groups across sectors, right? Even the strongest sectors of the market will have industry groups within them that are lagging the market. And if you own stocks in those groups, it might be a good opportunity to get them out of the portfolio. And if you're open to shorting stocks, it's a good opportunity to open short positions on the on that side of the market. Futures do point to a lower open today, although, as I said, off the worst levels. The power bar, not much of a change in terms of what we're seeing here in the Dow and the S&P 500. The NASDAQ really seeing some deterioration. Remember last week, this was predominantly 2.5 to 1 to the bulls. Now we're back to an even stance with the pullback that we're seeing. Recall yesterday we talked about how it's the cyclical momentum names that have gotten a hit, and that was NASDAQ leadership. Small cap back to outperforming, up 61 basis points yesterday against 20 basis points for the S&P 500. We do see a deterioration in their power bar, but not a lot of damage being done. I think you can use pullbacks in small cap stocks to set up positions for a continuation of the relative trend, which we've been talking about for some time, which is small cap outperformance relative to large. I think it's pretty clear that the trade tension headlines are not going away anytime soon. So you want to utilize that as an opportunity to get your portfolio squared up in terms of small relative to large. Bonds did see an uptick yesterday, and following through here this morning, as we said, 2.85% this morning on the 10-year yield. Energy, big outperformer yesterday, up over 1.25% on that move higher in oil. Remember last week we pointed out that our view that oil could test $60 was wrong, and we shifted gears. It's important not to become dogmatic in our view, and the market has followed through. We'll touch on that today. According to the Chaikin Power Bar, small cap stocks more bullish than large cap stocks. Major indexes are mixed. Here's your mixed trading, a return to choppy trading. Stock of the day today. PowerFeed subscribers will receive a stock of the day. Triple S Management has a very bullish power gauge rating for ticker symbol GTS, which was up 76 basis points yesterday to close at 41.37. Very bullish power gauge is a function of very attractive financial metrics, very strong earnings performance, and very strong price volume activity, as well as positive expert activity. So the factors line up to give us this very bullish power gauge rating. We have a very bullish stock, strong trend in a strong industry. We can see it here at the bottom of the ribbon. It's been predominantly bullish through most of the past 12 months. And currently massively outperforming the market. So the dynamic duo is in gear. The market is in agreement with the model. From a tactical standpoint, though, we need to hold off as far as I'm concerned, as our overbought, oversold indicator is in overbought conditions. Chaikin money flow is positive as the stock trades near highs. That's a good bullish confirmation. Stock is above the rising long-term trend line, but you can see we are extended here actually near the upper volatility band. So for me, GTS gets added to a bullish watch list. Want to wait for the stock to reach a more oversold condition as long as all else is the same, i.e. very bullish, outperforming the market, strong trend, strong industry with solid money flow. There'll be a better entry point for GTS. Triple S Management getting added to the bullish watch list today. Keep an eye on this one. Our sector tracker, looking at the movement over the last 5 days of the major sectors, and you can see the defensive posture here. Real estate, utilities, and staples are the three groups that are positive over the past 5 days. A function of defensive leaning in portfolios, a function of rates declining. Another function of rates declining is financials ending up here at the second from the bottom. Technology, featuring that risk-off sentiment that we're seeing in the market. The leaders are getting taken out of portfolios here a bit as portfolios are resized given the macro headlines. Consumer discretionary and technology, the two leading sectors of the market over much of the past few months, are seeing winners sold. We're not sure if that's going to continue. We want to remain nimble. We're not going to remain dogmatic in our view. Recall yesterday I said I was open to the possibility of real estate bottoming on a relative basis. So we'll keep an eye on that. They are the groups that have been leading over the past 5 days, and it could be early days for new trends. So, remain flexible is one of the keys to investment success. Follow your process is the other one. So, I am starting to see some more bullish names in real estate and in utilities. So that could be the sign of a change of trend in those groups, at least on a relative basis. So we'll keep an eye out for that. Our industry in focus today, healthcare equipment and services. This one's been an absolute monster. Over the past 6 months, the healthcare equipment group has outperformed the S&P 500 by over 20%, and its power bar ratio is still massively skewed to the bullish side. It's very strong with more bullish than bearish stocks. That is a measure of future potential. It's currently ranked number 2 of the 21 subsectors that we look at. Our Chaikin Analytics subscribers know that on Thursdays and Fridays, I isolate industry groups for further evaluation, and this is one that we isolated last week. And Integer Holdings, ITGR, was actually my pick of the day for Chaikin Analytics subscribers last week, either Thursday or Friday. So other indicative stocks in the space, Tandem Diabetes and Steris PLC, all with very bullish Chaikin power gauge ratings, all names that you want to consider on the long side if they set up from a tactical standpoint, because this is a leading industry in a leading sector, and these are leading stocks, and that is our process. So let's take a look further here. ITGR up 1.73% yesterday to close at 64.85. Here's your very bullish power gauge rating, strong trend in a strong industry, and this name still looks compelling. I called it out late last week. I'm calling it out again here today. Power gauge has been mostly bullish or neutral over the past 12 months, and we are strongly outperforming relative to the SPY. Market, in agreement with our model, dynamic duo is in gear, and the stock is just coming out of oversold conditions. So this is a compelling entry point, especially as we're seeing money flow into the market. Institutional investors are coming to this stock. You can see the bullish Chaikin money flow reading here. Pull back to test the rising long-term trend line after spiking following an earnings print. And this consolidation is likely setting you up for a compelling entry point as support holds here. We are in the lower half of our volatility bands. Folks, this is our process. This is exactly the type of setup that we are looking for to enter names on the long side. I like ITGR as a new position here, or if you've had it and it's a winner for you and you don't mind adding to winners, I think that's a great strategy as well. Look at ITGR on the long side. Trending stocks, yesterday's S&P 500 movers. On the gain side, GE rallies nearly 8% as they announced that they are basically breaking up the conglomerate structure, getting out of certain businesses which they don't deem compelling going into the future. So that has investors excited. Lennar following through on their earnings. Netflix was a loser on Monday, was a winner today. All neutrally rated stocks, but I think you can look at neutral stocks and neutral positive stocks if you're a Chaikin Analytics subscriber and look for the winners. If they're outperforming the market, you add them to a watch list. And then when they turn bullish, it's a compelling opportunity to pull the trigger on the long side. Some of the losers today, or yesterday rather, and the ones we want to focus on are Akamai, AKAM, down 2.5%, and LH down nearly 2.3%. These are very bullish stocks, so these are opportunities to potentially use pullbacks in market leaders to look to see if they're compelling on the long side for entries. Mark Chaikin has highlighted Akamai as one of his bullish stocks of the week for our clients, and I think it's a 2.5% pullback could create a compelling entry point if it triggers an oversold condition. So as I said, oil retakes the $70 level after turning last week. We talked about it last week, and it's following through. It's above the 50 and 200-day moving averages. The volume spike on the rally is really compelling here. And the positive RSI divergence as we follow through on that. I think next steps, there's an attack on the highs above $72, especially as Chaikin money flow is bullish. Investors are coming to this name on the long side, to this commodity, the oil commodity. I think we want to take a look here. I think we want to take a look at some of the energy stocks that have bullish or very bullish ratings that were hit as oil sold off, but maintain those bullish or very bullish ratings. Now could be a compelling time to add them to the portfolio. Every Wednesday, we look at sentiment for Chaikin Analytics subscribers, and one of my sentiment gauges is the VIX. It's the fear gauge, as it's known. So the VIX is spiked here as sentiment is shifting on the macro headlines. I will note that it closed at 1592 yesterday. That is elevated compared to last year, and it is above a 2-year linear regression. And interestingly, on data going back to 1990, when the VIX closes above 15, the S&P 500 is higher 6 months later, 67% of the time, for a median return of about 5.34%. So generally a positive skew. I'd like to see this, I think a more compelling setup is when this number is over 70, but 67% of the time is not bad. So I think sentiment is neither fearful or greedy at this point, but this is elevated relative to a 2-year regression. Today's note for Chaikin Analytics subscribers, I focused on isolating weak industries across sectors. And within consumer discretionary, the restaurant industry has been weak, and a bearish name that's worth a look on the short side or to get out of the portfolio is Yum Brands, ticker YUM. Bearish power gauge rating, lagging the SPY. It's oversold, so maybe we want to wait for an entry. Weak Chaikin money flow and below the long-term trend line, all set up to tell you that you don't want to own Yum Brands as far as I am concerned. At the sector level, no real change from yesterday. Healthcare, utilities, and technology at the top of the list. real estate, industrials, and materials at the bottom of the list. So every day you can get powerful, profitable stock ideas and more as a PowerFeed subscriber. www.chaikinanalytics.com/PowerFeed TV to sign up for free. I want to take the time now to thank StockCharts.com and StockCharts TV for hosting this show today and every day in the 9:15 time slot. Hope that everybody has a great day. Happy Wednesday. Happy trading.